Welcome back. Well, with the stock market's initial rout wreaking havoc, some now fear a global recession. The price poorer countries could pay for being linked into the worldwide financial network. Yet, for many, the devastating losses are symptomatic of globalization itself. For these communities, globalization means lower wages, working long hours and often poor conditions, leaving their ancestral lands as well as the loss of their cultural identity. But for its supporters, globalization is all about opportunity. They say that greater connection to the global economy has lifted millions out of poverty in China and India. Again, they cite the example of consumers benefiting from more affordable consumer goods. So who will the winners and the losers be? We're still joined by guests in Dubai, Monis Bazi, an independent investment advisor, and former Merrill Lynch executive director. In Washington, D.C., Samir Dasani, director of 50 Years is Enough, a U.S. network for global economic justice. And joining us just now from Delhi, Simon Cox, South Asia business correspondent for The Economist. OK, Mr. Cox, what impact has globalization and its role in global markets had in your part of the world?
It's been a far-reaching impact, mainly for the good, I would say. Certainly over the last 2 days, we've had a stock market rout here in India, partially recovered today. But that's because people are worried about the removal of a good thing, that is, a removal of a buoyant American economy that India up until now has prospered from being tied to.
Do you think globalization has been taken advantage of and the players involved?
Well, certainly. I mean, there are vast investment banks that bestride the global financial system, whose sole job it is to take advantage of the opportunities that globalization provides. Likewise, there are tremendous companies in India who are looking to take advantage of market niches and other lucrative areas of the economy where they feel they can make a difference and sell their wares.
Mr. Dasani, how would you have liked to have seen this play out?
Well, before I answer that question, I think I have to take issue with your previous guest characterization of things going well in India. In India, in rural areas, we have caloric intake, so the amount of calories people actually consume on a daily basis, going down. So just as there is a rise of an Indian middle class, just as millions of dollars and billions of dollars are being made in India through a sort of dynamic service economy, farmers in Punjab, in the richest state, are committing suicide at an enormous rate. 250,000 farmers have committed suicide in Punjab since 1997 alone. So this is part and parcel of being tied to this global economy. Now, as for how the current situation should and could play out, it's very difficult to say because we've built up a system where everything is so dependent on U.S. mega consumption, whether in India, whether in China, whether wherever. You're selling goods, you're selling services to the U.S. And the U.S. Economy, the U.S. consumption rates are tied to some of these shady lending practices, such as the subprime mortgage and so on, that when there's a chink in the armor, when there's a crack, the whole edifice starts to collapse, or has the danger of starting to collapse. Let's put it that way.
Do you think these relatively new players then can be better educated, and how would you do that?
I think that, just to go back to something that one of your earlier guests had also said, I disagree with the statement that money that's generated in India or in China or in Brazil should then be taken to European banks or to U.S. banks. I think there should be commercial investment banks within those countries, and I think the money should stay there. You should be investing in your own countries. You should be building up your own economies. And I think we have a global financial system that it's called a globalized system. It's not really as globalized as people would like to think. It's depending on the massive growth rates, on massive consumption rates, on massive middle classes in a very small parts of the world, in Europe, in North America, and in Japan. And I think what we really need to do, if we're really building a really sustainable, globalized economy, we need to be building up middle classes all over the world. And that means reversing a lot of what's been done in the name of so-called corporate globalization, reversing the sort of trade liberalization policies, reversing the privatization policies, reversing the budget austerity measures, and building up economies in India, in China, in wherever that also include the rise of a middle class, just as a middle class was brought up in the U.S. and Europe and so on by introduction of the welfare state measures.
Mr. Bazi, sorry, excuse me interrupting there. Mr. Bazi, some say that one of the biggest risks the world now faces is the increasing U.S. anti-globalization.
It is a risk, and we've seen, you know, on some of the political parties, a call for more protectionism. Basically, I mean, globalization is, you can't put it in one bucket. There are good sides to it and there are bad sides to it. United States is worried about losing jobs, which is bad for the US economy. It's also some of those jobs, in my opinion, you know, may be some form of exploitation of workers in less developed economies. So what I think is at some point, there needs to be checks and balances. There needs to be, you know, maybe conferences like Davos, where world leaders get together and agree upon, you know, what is good for all. You don't want, you know, free flow of funds, flow of technology, openness, free trade benefits everybody. There's no doubt in my mind. But however, you don't want, you know, bad practices. You don't want greed. You don't want some of the mishaps of the, you know, developed economies moving into the developing world.
Yeah, Mr. Cox, because this anti-globalization mentality will certainly have an impact on investors in countries, for example, in the region where you are.
That's right, and it could be tremendously dangerous. I think the political backlash against globalization is one of the chief worries haunting the global economy right now. I don't know if I can just respond to Mr. Dasani's comments. I mean, I think smart critics of globalization, and there are many smart critics of globalization, do draw a distinction between trade and finance. Overwhelmingly, economists think that trade is a good thing for countries like India. They tried getting by without trade for many decades after independence, and it was miserable, and it wasn't even that stable. There were lots of ups and downs in the economy, which they can generate all off their own bat. They don't need the American economy to generate instability. So trade is overwhelmingly a good thing. Global finance is a more mixed blessing, and we're seeing some of the downsides of that over the past couple of days.
Mr. Dasani, what about the increasing protectionism we're seeing happening within the US? Does that worry you?
Absolutely. I mean, that was my response to what Mr. Simon just said, that fair enough, trade is no doubt a good thing in many circumstances. But if we look at the US, if we look at the EU, these are economies that are highly dependent on tariffs, on subsidies. These are economies that over centuries have shifted their comparative advantage. Here in the US, our comparative advantage in the 18th century would have been the export of furs and fish. We decided not to do that, to introduce slavery, to introduce all kinds of market distorting mechanisms to create an industrialized society. So what we need to be doing, okay, yes, let's talk about trade, let's talk about how to make trade fair and possible and good, no doubt about it, but let's not outlaw, let's not rule out the possibilities of tariffs and subsidies and so on for the least developed countries. Now, India and China, these are countries that do have tariffs, they do have subsidies, but you know, if you look at a country like Malawi in Africa, this is a country that's tried in 2003 to impose some basic restrictions on the import of grain, was not allowed to do that, and it's a complicated story, but what happened in 2003 was there was a famine, an IMF-induced famine in a southern African country that was trying to do exactly what the U.S. does to its farmers every year. Here in the U.S., 40% of farmers' profits in a grain like rice is coming directly from state subsidies. So this is not a helpful situation. This is a situation that is that just reeks of hypocrisy.
Okay, Mr. Bazzi, if you will say this briefly, please. If nobody is exempt from America's sneeze and America's germs, what lessons have we learned?
Pick the best practices and apply them, you know, where it matters. Learn, you know, transfer the technology, transfer the operational systems, increase the efficiencies. It's a system that works and that benefits everybody, but I think with checks and balances.
Mr. Bazzi, thank you for that. Thank you to Mr. Cox and Mr. Dasani for trying to nitpick this issue that's affecting all of us. And of course, thank you so much for joining us here on this edition of Inside Story. We welcome your comments and suggestions. And if you can, email them to us at insidestory@aljazeera.net. That's insidestory@aljazeera.net. Goodbye for now, and thank you very much for watching.